Technical analysis is the discipline of forecasting the future price based on the study of current market action. Right? It's forecasting future price based on the study of current market action. Now, one basic tenet of technical analysis is the efficient market theory. And this efficient market theory pretty much says that everything known about a coin is reflected in the current market price. So think about news, think about the fundamentals. The whole idea is that people are willing to pay the current price because they've already factored in every other kind of current or everything else known currently about that coin. So except some new information comes out right away, the current price is already factored in the news, already factored in everything else. That's why a lot of technical analysts, they rely heavily on charts, and it's because of this efficient market theory. Remember, everything known about a coin is reflected in the current market price. Now, technical analysis also holds to the theory that price moves in trends. You hear a lot of technical analysts say things like the trend is your friend, right? Do not go against the trend. And trust me, that's the one you might want to write down and put it in the wall where you can see it. The trend is truly your friend. Now, think about it this way. People derive sort of direction from the action of someone else. More often than not, that's the case. Think about it this way. If Warren Buffett calls 100 people right now and tell them he's buying XYZ coin, right? A good percentage of these people would take this as a signal, right? That they should also buy XYZ coin. Now, at that point, you would see that investors begin to enter the market. Investors all of a sudden begin to troop towards this XYZ coin. And this is the start of what we will call a buying trend. One action typically triggers the next. Now, technical analysis is founded on the idea that studying the past behavior and patterns of a coin allows traders to develop a reasonable forecast of what the underlying coin is likely to do in the future. It's the study of the past patterns, past behaviors, right? So we can use that to forecast, right, what it's more likely to do in the future. Now, the technician or technical analyst carefully studies charts because, certain patterns and trends will develop time and time again. Like, honestly, you're going to see it over and over again. Market history, it tends to repeat itself. Now, if you recognize historically documented patterns early enough, you can seriously profit from the expected move. And that's the beauty about charts. Essentially, technical analysis is based on the belief that all fundamental data, right, it's already conveyed in the current market price, and then information can be expressed. All this information, all this data about the news, about the deals, all of this can be expressed in some type of graphical format, and this graphical format is what we now refer to as a chart. Now, the focus of this course is primarily on the Japanese candlestick. Now, I believe that this type of candlestick provides the fastest, the most complete synopsis of a coin's activity over a given time frame. In the following lectures, you will learn to read this chart and understand the message that it truly tells. Because at the end of the day, that's all a chart does. It tells us a story on economics, a story on supply and demand, right? And the force between supply and demand. And this helps us to best position ourselves and take high probability trades.